Hey, hi everyone. Welcome to another video in our hedge fund series. So we have discussed about tiger management and we also discussed about tiger cubs and so today we are going to discuss about one of the tiger cub, Chase Coleman and his hedge fund Tiger Global, and what are the education details of this particular founder and what strategies he uses in this hedge fund, and how the performance of the hedge fund is there, what are the challenges that he faced while running this fund, and what are the major milestones that this fund has achieved, along with the risk management lessons and the management fees of this particular fund. Okay. So Chase Coleman, who is the founder of Tiger Global, is born in 1975 in USA, and his education is BA in economics in Williams College. And he was the protege of Julian Robertson, who is the founder of Tiger Management. And his fund is seeded by Robertson with $25 million in 2001. So $25 million so seed fund has been provided by Robertson to form this Tiger Global. And Chase Coleman is a part of Tiger Cubs and a former analyst at Tiger Management, and he launched his own successful hedge fund. This Tiger Global Management is formed in 2001, and the founder is Chase Coleman, headquartered in New York, USA. Assets under management of 50 to 60 billion at its peak as of 2021, and although assets have fluctuated post 2022 losses. Okay. Investment strategy: two primary strategies are used. Long only fund, so invest in long global growth equities, particularly technology and consumer internet companies. They grow long on these companies, and they put highly conviction and concentrated bets on these companies, and they stay also they put a strong focus on private equity style investments in late stage startups. Okay, the other strategy that they use is hedge fund long short equity fund. So they combine the long positions in growth stocks with short positions in companies which are expected to underperform. They have a global focus, especially US, China, and India, and aggressively they have invested in private technology startups. They have invested in Flipkart, Byju's, Alibaba, JD.com. Miles. Hey, hi everyone. So the key milestones and achievements of this Tiger Global Fund, or in 2000 fund, the fund was launched with 25 million from Julian Robertson. And by 2007 and 13, it was generating consistent high returns and became known for shop tech stock picks. And 2014 and 21, it gained massive gains from global tech bull market. Invested, early in Flipkart, Meituan, Facebook, LinkedIn, Uber, and Peloton. By 2020 and 21, exceptional performance, reportedly gained 48% in 20 and 26% in 21. But in 2022 faced one of the largest hedge fund losses ever, 17 billion, due to tech stock collapse. Okay, challenges faced by this funder: 2022 crash. It's overexposure to overvalued tech stocks and private valuations during the tech bubble burst, and markdowns in private holdings and poor performance in public markets. And yeah, so these are the challenges faced. Reassessed risk and cut exposure dramatically in 2023 to reposition. And illiquidity in liquidity in private markets, so difficulty exiting investments in private unicorns like Byju's, Stripe, etc., as valuations dropped sharply. Okay, so it's a reverse of what Tiger management has done. So he has shorted them, and he was a value investor, and he basically missed that entire bull momentum. And yeah, but here it is done opposite, right? So they have invested in it, but they invested in overvalued tech stocks also, and even went aggressively putting private investments also in certain companies. And when it all came crumbling down, the stock, the hedge fund incurred losses. But again, it repositioned itself, and by assessing risk and cutting exposure dramatically. So, what was a lesson in one thing is a profit maker in another thing, but again a lesson, because at the end of the end, Tiger Globe management was correct in his prediction that it's going to burst, it's a bubble, and it's going to burst. And here they made everything. They made a lot of money during the bubble, or the momentum, but again when it burst, they lost everything. So not everything, but they lost significant amount of money. The fund performance in 2020 was 48%, 21 was 26%, and 22 was minus 56%. It was one of the worst years for the major hedge fund. In 2023 was 27%. It's a recovery phase as per industry sources. Despite these massive setbacks, long-term annualized returns remain at over strong over a 20-year horizon. Okay. Management fees and performance fees is 220 structural form. Management fees 2% of the assets under management, and performance fees is 20% of profits. And risk management lessons we can learn is concentration risk, overexposure to tech names, amplified 2022 losses. Private market valuation lag is there. Unrealized losses in startups became visible later, like Byju's and a few startups. They have invested a lot of money. Those valuations were big initially, so it was. But yeah, when it went down, then all those losses became visible later because it's private market valuation. Adaptability. Tiger aggressively reduced exposure and shifted in 2023. So this time they have adapted, and yeah, again they took a concentration risk only this time, but going on the momentum instead of value investing. Illiquidity matters again. Private equity, they put the money, and that was not able to be removed. Like in US Airways, they put the money, which was a single concentrated bet, and illiquidity was there. Here also, they put again illiquidity matters. Private equity style investments limit flexibility in a downturn, like Byju's and all that. Your money basically is gone. Risk isn't just volatility. Need better models to assess tail risk and correlation breakdowns. But yeah, this is the fund which has made bets globally, and it has investment footprint in India, China, and US. In India, especially Flipkart, Delivery, Zomato, Razorpay, Byju's. These are all best trades they have done. China, Alibaba, JD.com, and Didi. And US, Meta, Uber, Stripe, Peloton. So these are all the investment footprint this company has. Assets under management at 60 billion, and key strategy is long, short, and private tech investing. Top trades are Flipkart of India, Alibaba, Meta, and Uber. Worst losses in 2022, 17 billion losses there. Fees is 2 and 20, management and performance fee. And he is one of the most influential Tiger Cups, backed many tech unicorns globally. So that's the video on Tiger Global, which is a hedge fund and is formed by one of the major Tiger Cup, the Tiger Management hedge fund manager. And its main strategies are long only fund and long short equity funds. And it majorly focuses on tech and consumer internet companies and concentrated bets. And it also did private equity style investments and late stage startups. And it has its global focus, US, China, and India. And yeah, it did incur losses in 2022 due to overvalued tech stocks getting crashed and private valuations going for a down dive. But yeah, still it is having a good performance over a 20 year horizon. And yeah, so that's it for today, guys. So thanks everyone for joining the call. Have a nice day. Bye.